Hey guys, Aaron here, First Lending, where we put your future first. One of the questions we get a lot, especially from our first-time home buyers, are around the acronyms that are used when qualifying for a mortgage. So what I wanted to do was take a few videos and focus on 4 of the major acronyms used. And some of you, if you've purchased before, you might have heard some of these terms, but for those who haven't, I just wanted to give a really high-level simple breakdown of what these acronyms are. So the 4 acronyms we'll focus on, and we'll do a video for each, are LTV, DTI, PITI, and A in some cases, and PMI. So this video will look at an LTV. What is an LTV? LTV stands for loan to value. The best way to describe a loan to value would be the percentage of a loan that needs to be borrowed compared to the purchase price of a property. So let me give you an example. Mary Jo's worked hard. She saved up, just say $10,000 to put down toward her home. Mary Jo, based on her qualifications, found out that she could purchase a home up to about $120,000. So Mary Jo's excited. She's ready to crack into home ownership, something she's been thinking about for a while. Mary Jo finds a property listed at $100,000. So Mary Jo says, okay, I really like this house. And Mary Jo has this $10,000 she's been saving up and she wants to put toward a down payment. So that would mean $100,000 sale price, Mary Jo's $10,000 backed out of that, that would leave $90,000 that Mary Jo would need to borrow in order to purchase this home. So that $90,000 represents 90% of the sales price. So her LTV, or her loan to value, is 90%. Some of you might think, oh, $100,000 is not going to get me much in my area. So you can scale that up to whatever area you're in. So again, the loan amount she needs is $90,000. And $90,000 represents 90% of the amount to purchase that house. So she needs to borrow that 90%. So that essentially is what an LTV is, or loan to value is. Why is an LTV important? It helps determine, to me, 2 major things. One, an LTV determines whether or not you have to pay PMI, which is another acronym we'll talk about in our next video. So it'll determine whether or not we have to pay PMI, or primary mortgage insurance. 2, your LTV, the higher your LTV is, or higher that percentage is, or the more money you need to borrow compared to that loan amount, typically the higher your interest rate goes. Or the less money you need to borrow, typically the lower your interest rate goes. So if Mary Jo had, instead of $10,000, she had, just say, $30,000 she wanted to put down. That means the amount she would need to borrow is $70,000. So her LTV would be 70%, and she would get a little better interest rate than she would have being at 90%. So though that's kind of a really high-level example of what an LTV is, and how it correlates to other parts of the mortgage. So again, if you guys have any questions, you can contact us, 813-418-6916. You can call us, leave a message, we won't pick up, we'll call back shortly, or send us a text if you're more comfortable with that. You can email us, info@equifirstlending.com. Visit us online as well, equifirstlending.com. Either way, reach out to us. We would love to earn your business. Again, Aaron, First Lending, we want to make sure that you don't just become homeowners, but are prepared for home ownership. First Lending, where we put your future first.